The silver supply side mostly comes as a byproduct from mining copper, lead, zinc, and gold. And if the world experiences a sudden crisis, it will probably go along with a global recession, which means that there's less copper, zinc, lead, and gold, or not gold. Gold will be mined more, but copper, zinc, and lead, where the majority of silver comes from. So silver supply will be going down, just as, this demand for industrial applications might fall, but just when everybody wants it as a safe haven asset, the supplies dry up. That is one of the big fundamentals underlying silver that is so incredibly positive.
Silver is grabbing headlines on Monday as it surges to heights not seen in 11 years, breaking through the crucial psychological barrier of $30. This impressive surge is driven by many factors, including its well-known safe haven characteristics, the ongoing weakening of the US dollar, and its essential role in various industrial sectors. Silver hits a fresh trend high of $32.52, starting the week with strong momentum, positioning itself for a robust close in the upper third of Monday's trading range. This surge represents a substantial leap of 6.50 points, or 25.0% from its recent swing low of $26.02 recorded on May 2nd. Despite today's highs, silver faces the challenge of a potential resistance zone, which could trigger a pullback or even a more significant retracement. Although an intraday pullback is underway, trading remains above the midpoint of the day's range. Analysts are optimistic about silver's upward trajectory, suggesting that this surge may just be the beginning, with solid momentum driving its ascent. Renowned analyst MikeMaloney sheds light on the fundamental deficit present in the silver market, emphasizing its unique dual role as both an industrial commodity and a monetary metal. Silver stands to gain from increasing industrial demand in the long run, with the Silver Institute's World Silver Survey report projecting a 9% rise in industrial demand this year, fueled by renewable energy applications. Unlike gold, silver's diverse applications make its market dynamics more intricate. Most of the silver supply comes as a byproduct of mining other metals like copper, lead, zinc, and gold. During global crises or recessions, reduced production of these base metals decreases the silver supply. Conversely, silver's demand as a safe haven asset tends to spike during such periods, creating a notable supply-demand imbalance. Join us as we delve into Mike Maloney's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
This is the fundamental deficit that we are seeing in silver right now. And it's one of when you add that to the fact that silver is one of the monetary metals. So what is it that people run to as a safe haven? There's bonds, and there's cash, and there's gold, and there's silver. Those are like the four monetary assets, really. And silver has this industrial demand at the same time that it is a monetary metal. And the silver supply side mostly comes as a byproduct from mining copper, lead, zinc, and gold. And if the world experiences a sudden crisis, it will probably go along with a global recession, which means that there's less copper, zinc, lead, and gold, or not gold. Gold will be mined more, but copper, zinc, and lead, where the majority of silver comes from. So silver supply will be going down, just as this demand for industrial applications might fall, but just when everybody wants it as a safe haven asset, the supplies dry up. That is one of the big fundamentals underlying silver that is so incredibly positive. Now, back in March, we were going to try to slip this into a video, but for some reason we never did. We just didn't figure out how it goes in there. But this is one of the HSBC vaults in London. This is millions of ounces of silver. And you see it here at about 52 million ounces, and then it jumps up to 75 million ounces. Well, take, $27 times that many ounces. And this is a huge purchase. And it was on, I believe, one of the days where silver was rising. So this was part of the rise, and nobody reported on it. And so there you are. This is what is going on in the world right now. So I think we're seeing this little pullback in silver as I make this video, but I do think silver is headed for some really big things coming up.
Gold prices recently shot up past $2,400, marking a new high driven by various positive factors. Futures for June 2024 settled at a record $2,419.80, showing a significant increase of $39 or 1.64%. The spot price of gold also surged, climbing by $41 or 1.78% to hit an unprecedented $2,417.50. This surge in gold value occurred even as the US dollar remained relatively stable, indicating that currency fluctuations weren't the primary catalyst. Mike highlights that the central bank activity has been another significant factor influencing precious metal prices. Historically, central banks were net sellers of gold until the global financial crisis, after which they transitioned to becoming net buyers, particularly in Eastern countries like China. This shift is evident in the significant gold trading activity observed in China and other Eastern nations. China's efforts to stabilize its crisis-hit property sector through stimulus measures have also contributed to the rise in gold prices. China's expressed desire to reduce reliance on the US dollar as the international reserve currency has further fueled the surge in gold prices. The country has proposed alternative global financial systems controlled by entities like the International Monetary Fund, IMF. Additionally, Mike asserts that the rise of central bank digital currency supports this shift away from the dollar, allowing countries to create reserve baskets of currencies beyond the US dollar, thereby reducing dependence on it for international transactions and settlements.
What is driving the price of precious metals right now? And as we know, part of it is central bank buying and selling. And we were net sellers up until the global financial crisis. And then the world's central banks became net buyers. But who is it that's buying? If you watch Alan Hibbard's great video, Chinese Gold Trading Explodes, you'll see that it's the East that is now buying. And so in there, he shows this chart of East versus West, and you look at how much the East had. Now, I want to point out that this chart starts at 15 million tons and goes up to over 36, 37 million tons, but it starts at 15. So this looks like the East has half of the world's central bank gold. Well, they don't. There's, each one. This is 10 million. So there's, basically this much space at the bottom of this graph that's not being shown. This is Nick Laird's graph. I just wanted to point that out. But as a percentage of the world's central bank gold, if you add from 30,000, this 15,000 tons down to the bottom of this chart, you see that this is only like 3%. It isn't even 5% of the world's central bank gold. And now they've gone to a significant percentage, about a third of the world's central bank gold. So that's one of the things that's causing the buying and all of the explosion in gold trading in China. And then Luke Groman reminds us that, yes, Chinese buying is helping drive the gold price, but here's why. And they told us back in March of 2009, they said that that the world basically needs the US dollar as the international world reserve currency. They're proposing replacing the US dollar in a new global financial system controlled by the International Monetary Fund. Well, since 2009, we've had the advent of all of the world's central banks working on central bank digital currencies. And that makes them very easily create a reserve basket of currencies that are other than the US dollar. And it will probably incorporate the US dollar, but it won't just be the US dollar. Well, that means that now there is, just as I predicted at the end of that 140 years of history in 10 minutes, you'll see that half of the dollars that are created reside outside the borders of the United States. And if they don't need those anymore for settlement, like, oil is no longer exclusively traded in US dollars. It's now, if they have this basket of currencies, things will be settled in more of an international currency. And when it comes to the replacement for the SWIFT system, whatever that is, it's going to be something more like this basket of currencies that are more stable than the exchange rate of the US dollar to each individual currency. And so as all of these trading houses and banks and central banks don't need all of those dollars, what do they do with them? They come over here and buy US dollar denominated assets. And we've experienced something like this in the past. In the late 80s, Japan was having a stock market boom, and they all felt extremely rich.
Looking forward, silver is set to continue its upward trend. The outlook remains bullish with the Federal Reserve's cautious stance on interest rates and positive signs from China's property market. Silver may face resistance at $33 in the short term, aiming for $35.40, while strong support lies at $29.80 for future gains. Where are the prices heading next? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.